What just happened was we had a bubble floating around in search of a pin. And DeepSeek showed up with a pin that fit the bubble just perfectly. So the bubble is popping. In my opinion, you're going to see semiconductors become a source of funds for the other sectors of those Trump trades that I just mentioned, all those sectors that just started breaking out. And the bull market in the S&P is going to be as ferocious as it ever was.
Please welcome Tony Greer to Wealthion. Tony's a veteran of the market with several decades of experience. He's the founder of TG Macro and provides fundamental, technical, and behavioral analysis on global markets. He's also a host of the very informative and highly entertaining Macro Dirt podcast with Jared Dillian. Tony, thanks so much for joining me.
Oh, Andrew, thanks so much for having me on, and thanks for mentioning the love of my life, the Macro Dirt podcast.
Well, Jared's a good friend of Wealthion also, and he's always fun to have on. And I'm happy to have you here as well. But
happy to
Tony,
be here.
Let's start by asking you your take on the present economy as we sit here today.
Well, I'm optimistic to start from whatever starting point we choose. I feel like if anything, I'm a market guy, not an economist, right? I'm a trader, not as much of an economist. So my view on that is that over the last several months, the economy just kind of the markets just withstood two growth scares, like one in the US, right, where we pivoted to easing rates, as far as the eye can see, and a growth scare in China, to follow, where they had weaker manufacturing data, GDP, et cetera, and nothing seemed to have come apart, in terms of the markets. The economy, I understand it strengthens, it softens, et cetera. But I think the most important dynamic now is that we have a business friendly guy in the White House. I'm trying to think about things that Stan Druckenmiller said, we went from having the most unfriendly business administration to having the exact opposite. So I'm hoping that with, lower regulation, maybe low rates or something like that the economy starts flying. I have some sort of moderate fears that there might be some inflation bumps along the way, because I feel like the Fed has been in a little bit of a pickle. I feel like they made a slight policy error, if there's such thing, pivoting to, 9 rate cuts in a row with Fartcoin trading, 150 billion market cap or whatever the number is, seems excessive to me. So I feel like that's going to spike a bit of headline inflation, but I don't think that the economy, I'm not a recession bro. I don't ever go into that kind of, debilitating thought or anything like that. To me, the economy is either firing on all cylinders, somewhere in the middle, or we're kind of softer for now. That's how I look at it.
I guess sticky inflation, it's not really moving anywhere. It's not going up. Not really coming down. So the Fed is, like you said, in that pickle where they would like it to come down more. And then you have a new president in office who's obviously going to put some pressure on to bring that rate down. Where do you think the Fed sits at this point?
Man, I think afraid of Donald Trump to call them at this point, So probably, I think that I don't underestimate Jerome Powell. I think that he's done a pretty remarkable job navigating markets, given the circumstances he's been forced to deal with. I think he's really good at managing expectations and letting the markets do the heavy lifting for him. And so, I never get into a position where the Fed is trapped or anything like that, right? They control money supply and they control rate hike or cut expectations. So they're never, ever, ever, ever out of control, right? I think that what's going to happen is we're going to have a couple of inflationary bursts that are going to have to there's going to be, let me try to frame this the right way. I think we're going to have an improving economy where you would say rates will head lower, but we're also going to have bouts with headline inflation flare-ups here and there, right? So there's the case for rates being higher. So I think, like we've seen before the administration, we found the peak in 10-year yields. We found the peak in the curve, backed off in all of those markets. And if those markets have found their range tops in the short term, then I don't think the Fed has to do much along the lines of varying from expectations. I think that they'll stay in line with a couple more cuts. We'll see what happens. the economy probably strengthens and they probably are forced to do very little. But like I said, I'm not an economist, I'm a trader.
Well, what are you thinking about the bond market? It had inverted back. I guess it steepened on the long end, but now it seems kind of flat. What are we dealing with here in the bond market?
Well, the message that I'm trying to that it's sending me that it sent me at the beginning of the year when bonds tanked right into the start of the year was, is this a sign that rates are going to start? What happened was the sell-off in TLT and the bond market at the very beginning of the year caused yields to spike above last year's high. And I'm saying to myself, does this mean we're going to start trending higher now in yields? It seems like the sort of inflation won't go down any further. The economy's not very weak. And so it seems like yields might be able to go up. And, the bond market naturally makes a little bit of a fool of you. That's the high in yields. They pull back, right? We get some better than expected data. And next thing you know, everything's in balance. The big thing for me is the 2s-10s curve, Andrew. We spent the bulk of last year inverted in negative territory between, say, call it 10 and minus 10 and minus 40 basis points. Into this year, with the change in admin and things like that, and the sort of sell-off in the bond market, we've seen the yield curve steepen to plus 40 basis points at the highs, right? So we went right through unchanged all the way up to 40 basis points. And that was a really steep move. That move was like from minus 30 to plus 40, all in the same move. I have a feeling that might have been it. I have a feeling that the market may have over-adjusted ahead of the next president. And that's my feeling right now as a trader that's subject to change. But I like the fact for the markets that yields have backed off their highs, right? It gives us a chance to think about a possible bond rally. If bonds are going to rally and rates are going to go down, the S&P rally is going to be well intact, if you ask me. I think it's going to wildly survive this little DeepSeek / Nvidia / semiconductor kerfuffle that we're in the middle of right now. But that's it. I'm going to let you keep asking the questions, Andrew.
If you would like help with your financial efforts, head over to wealthion.com/free for a free portfolio review. So let's talk about DeepSeek for a minute, and AI. And I know that we'll get into commodities. You were a commodities guy first, then you got into tech. So tech is one of those things, and I loved your note about never time the market because you're going to get hurt. But it's talk to me about AI and where DeepSeek fits into this. Can we believe what's coming out of China, A, and B, have they figured something out that the brilliant minds here in the U.S. haven't been able to?
A, I don't know. B, I doubt it. Just to answer those quickly. But my thing is this, what just happened was we had a bubble floating around in search of a pin. And DeepSeek showed up with a pin that fit the bubble just perfectly, right? Nvidia, the most popular stock in the most popular sector of the best performing stock index, right? Probably the most popular stock in history, I would say, in the history of the stock market. So it's looking for a reason to back off because Jensen Huang was signing breasts and it didn't back off. It split 10 for 1 and it didn't back off. It approached the market cap of India and it didn't back off, right? There's no backing off of a bubble, right? There is no backing off until you find the pin. So now we found the pin. DeepSeek is going to do everything NVIDIA does at a much lower cost and basically, according to some people on the street, blew up NVIDIA's business model and they think they're going to go to zero. I think that's dramatically that's going too far, right? I don't think that's the case. I think that the NVIDIA bubble is popping. It probably backs off more. We probably see other beneficiaries in the AI market. We've got a rearrangement in this data center energy trade, right? Where utilities backed off, uranium backed off, everything. Now you've got software stocks that are taking the lead again. So, this is all just, if you ask me, this is part of the sort of headline volatility that comes with a new administration. Like, I understand that China caused the NVIDIA bubble to deflate, but it was the Trump inauguration or the Trump election that caused Bitcoin to explode $30,000. It was the Trump inauguration that caused software, cybersecurity, and cloud computing to break out in November. It was the Trump inauguration that had financials, broker-dealers, and transports come roaring back from like no performance on the year to be up on the leaderboard for the year in the last month. So those are the Trump trades that are developing. And the semiconductor trade is as long in the tooth as any trade I've ever seen. Hang in there, right? Everybody's loaded to the boat, levered long, AI. The biggest sector is semiconductors. The sector was up 48% last year. And they're like, beautiful, we're going to do that again. No brainer, right? So, yeah, Nvidia's up 140. What's it going to be up this year? I don't know, 300, 500, pick a number, right? So the bubble is popping. In my opinion, you're going to see semiconductors become a source of funds for the other sectors of those Trump trades that I just mentioned, all those sectors that just started breaking out. And the bull market in the S&P is going to be as ferocious as it ever was.
Wow. Are we looking at software being that, like, Nvidia and their hardware and their chips and all this stuff was the talk of 2024?
Yeah.
Are we looking for the programmers or the programs to run on AI? Is that the next big thing?
It's amazing, Andrew, is that it could be. I never thought of it as that until, I was early catching the cloud storage, software, and cybersecurity and internet sector breakouts at the end of last year, because those sectors were very clearly consolidating for over a year. They were not performing. They were going nowhere. They were sideways for an entire year. And then they finally broke through the top of the range. And then, you get more AI strength. These breakouts continue. And then, what happened is we saw there was a shot to the AI bow yesterday. And if you look at the screens today, what did the market use it to do? Well, they used it to inhale the dip caused by the Nvidia sell-off. They used it to inhale Nvidia. They inhaled cloud storage, they inhaled software, they inhaled tech, they inhaled cybersecurity and internet stocks. Those are the top performing sectors on the market today, and those are the breakouts that we spied in November, all going at once.
Right.
So in my opinion, like, the bull is far from dead. The DeepSeek, I mean, good for you, changing the calculus in a really complicated market, in a frontier market, certainly. And I think that's why everybody's jumping to dramatic conclusions that, like, this is the end of Nvidia, like, the company's over. I don't see it like that at all. But I'm not really a sensationalist, or I feel like I've seen almost everything in this market, so nothing shocks me anymore.
So Jensen Huang's still blessing babies, so that's a good thing if you have Nvidia in your portfolio.
Yeah, right. So we'll see. I mean, there's nothing. Nvidia itself looks like it got overextended. Maybe it's sideways for a little while and stuff like that, but I don't think it's going to curl over and die as an AI company. That's all.
Do you see the market continuing? Look, during the Biden administration, the market went up, the dollar very strong. Usually when the dollar is not so strong, market comes down a little bit. Do you see, although we know Trump wants to devalue the dollar a little bit, you see the market still going? You seem to be still a bull on the market.
Oh, I'm a bull in the stock market, yeah. But to address the dollar comment that you made, the dollar was all about Trump winning. The dollar rally was all about Trump winning and sanctioning and, literally just overpowering other countries economically. And, it's hard to figure out how that's going to end right now, right? Like, there's a massive outperformance in the U.S. that's been going on for years. The money flows are all into the U.S. At some point that dynamic will change, but probably not in the immediate future. It seems like, people are thinking, and even I was thinking that, Trump could have been the sort of Costanza president where, Biden's a president, he's anti-business, but stocks go up for 4 years. And now we got Trump, who's pro-business, low regulation. Maybe this is the story where stocks go down for a couple of years. But I don't think, after giving that a chance to play out, I don't think that's the case anymore. It seems like everything else about the markets is healthy for me. I like the rates markets backing off. I like the curve backing off. I like the dollar at least trading out of a straight line. For God's sakes, that's a really difficult dynamic to manage. So yeah, that's probably hurt some exporters, that if he ever gets the dollar down, there might be some tailwinds there for some exporters if he can actually weaken the dollar. But I got a feeling under this scenario where he's being very America first, that it's going to be kind of difficult to knock the dollar down, if that's fair. And I may be wrong, but that's kind of how I'm looking at it.
I want to ask you about America first, since you brought it up. He's cut off a whole bunch of aid and stuff, like off the cliff. Just on the 24th, he said, that's it. No more aid to anybody. It'll be a special circumstance. You have to apply for it. He's not, I shouldn't say he didn't cut it off. He sort of put it on pause.
Yeah.
I'm wondering how much this hurts imports, exports, as far as business goes, or do you think this is a way for him to get spending under control?
Man, well, I don't know that it's a direct effect on controlling spending, right? Trump is going to spend the daylights out of the treasury like he did in his first administration, and then Biden tripled that or whatever it was, and now we're going to go back to something normal where he's going to borrow and spend, right? Like there's kind of no doubt about that. He's an infrastructure guy. The money's going to come from somewhere. But to get back to the beginning, the first part of the question about him cutting aid off and, talking about sanctions and things like that, I think that he's just a guy that's been tired of having every country's hand in our pocketbook for the last, 8-10 years of this whole big globalism campaign that has come to clearly an abrupt and final halt, with the death of DEI everywhere. I called it in February. I called it in January a year ago, actually. I wrote the RIP DEI. That was when the Boeing door flew off. And I was like, it takes a trained eye to see this, but it's over. Right. 1 year later, Trump comes in, and now every company, country, and corporation on the planet is ending their DEI practice except for Ben and Jerry's. Right. So go ahead, guys, have at it, have the blue hair and the whole thing. It's all right. It's great. So I just look at him as a guy that's trying to get things back into focus for the US, like the focus has been, okay, open our wallets. We pay for the Paris Climate Agreement. We pay for the Green New Deal. We pay for the climate. We pay for the World Economic Foundation. We pay for the World Health Organization, like for what? For absolute freaking what? So Trump's a guy that looks at that, and he looks at the assets and liabilities and incoming and outgoing expenses. And he's like, no, I don't need to write these checks anymore. And I think it's a beautiful thing, quite honestly.
When you look at it, the U.S. footing the 64% of the bill for the WHO and all of these places where, that's a small percentage. If you look at other places, it's a larger percentage that America is footing the bill on.
Oh yeah,
and that started long before Biden.
And other countries out there are just flat out not paying.
They're receiving.
Right, exactly. Yeah. So it's literally like our pocketbook is open to the world. And I think that Trump just wants that to come to an end. And I kind of agree with him.
Do you think business will be better off? And I know that business will be better off under Trump, but at what point I'm trying to ask, when does business get better? When does things really start to look up? When do prices start to come down? Because people are doing so well that they can actually bring the price of eggs down to it. I get the bird flu and stuff, but prices for goods have to come down at some point.
Well, the battle there started in 2020, right? Because the reason that we see the consumer good and I won't say commodity inflation, but I'll say consumer price inflation on the screens, which reflects maybe a tenth of what real inflation really is, right? It's probably 30% a year of the money that you spend, of things that you spend money on. They probably go up 30% a year on average. They have PPI and CPI tucked away at 3% through a lot of financial engineering and bullshit. So for those prices to come down, we're battling doubling the money supply after COVID. Right. We diluted the dollar to zero. We turned it into paper towels and tissue paper. And now all of a sudden, everything priced in dollars is worth shit. Is going up and the dollars are worth shit. Right. So basically what I say is we're witnessing the death of fiat currency everywhere you look. Right. Everything is getting more expensive in dollars. Gold is exploding. Bitcoin won't trade the bid because everybody wants an alternative currency. And fiat currency is losing its purchasing power left and right. So to me, that's because of the horrible response to the horrible event that was COVID. We doubled our money supply. It went up 40% in that year. And now we're battling the effects of it. So I don't know that there's a magic wand that Trump can wave to get inflation as we feel it in our wallets back in the bottle. But I think that he knows enough about complex systems in the economy whereby he may be able to engineer the gas price lower and our energy costs a little lower. And maybe cutting regulation winds up saving us money in a few other different places. And maybe if the IRS isn't up our ass, then we have a couple of extra bucks in our pocket. And so I got a feeling that he's going to kind of work angles like that he knows are very practical. And, I think he knows that he may not be able to control inflation, but he can work on things to make it easier for people to handle. And then eventually maybe it comes back down. So it's a slippery slope, that inflation genie, right? Because she doesn't go back in the bottle right away. And it takes time for things to happen. But I feel like our country already has a very different look and feel than it did 8 weeks ago.
Do you think that, and I've been reading probably too much, and there's a lot on social media about don't spend 2025. And it's a lot of, I guess it's a lot of, middle income families that are saying, hey, look, we're going to use the toothpaste until it's finished. We're going to finish everything. We're not spending extra money, and we're just going to, we're going to live lean. We're going to pay off debt, but that's going to hurt GDP at some point.
Yeah. There's a group of people that are in that predicament, and there's a group of people that are paying $600 to go see the Knicks. You know what I mean? So it's like, the economy. Yes, there are people that are in predicaments with their industry or in struggles personally, and they're maybe not doing well with this terrible inflation that we're having. And I utterly sympathize with that. I do think that is sort of cyclical, and the price of energy will come down, and inflation will get a little bit better. Come to us like prices come back to us a little bit. But it's also, there's this sort of channel checks on the economy that I can't turn a blind eye to. Like, you still can't get a steakhouse reservation in New York City on a Tuesday unless you call a month in advance. I'm a concert goer, and concert tickets are, trading through the roof no matter who you're going to see. Things like that. So like, there's these insane bull markets in event price. Live Nation hasn't stopped trading the offer since Trump got elected. Apparently it's going to be a big administration for live performances, and everybody's going to be going to see concerts and everything like that. But this is where people spend a lot of money. And these are markets that don't seem to stop, like Las Vegas, Nashville. There's cities you can go that are just bull market all the time. And so they're kind of the reason I don't get caught up in, all of the downside, is because the reality is somewhere in the middle. The big spenders are fretting over big dollars, and people with these predicaments have smaller problems to the world, but bigger problems within their own home.
Right.
And unfortunately, I can't help with all of that. I can only hope that inflation gets better and the economy gets better. So hopefully they pick up the tailwinds, but I'm not an economist. I'm a trader.
Right. It just seems that people are, at this point, people are doing things with their money to make them happy, because either they're in a predicament where, life stinks, and I'm going to go see that basketball game, or I'm going to see that concert, and that's what I'm going to spend my money on. So,
Yeah.
I'll live without paper towels, but I'm going to see, whoever it is that I want to see on Broadway.
Well, humans are the most resilient creatures ever created by God. So, my point is that, we've been hit with so many. We're still here after everything that we've been hit with over the years, et cetera, right? Life goes on, right? So that's kind of the way I'm looking at the world now.
So what sectors are you looking at? I know that you've been into tech, and I know you've been into commodities. Do you see commodities coming back at some point if we're able to get the dollar back down? It's been suppressed for a good bit of time, and with rebuilding everything that has to be rebuilt around the world. California now has to rebuild.
Yeah.
So there's commodities that are going to have to be needed.
Yeah, I could stay bullish the sector, and I could stay bullish the space. I think it kind of comes down to, you're going to have to carve it up into individual commodities. Like you look at things like, even the gas price and natural gas to start at, right? They're still, given inflation, they're still dirt cheap. Like energy costs are still cheap. Base metals and things like that, they're going to trade opposite the dollar. Precious metals are going to trade higher with the death of fiat currency. And if natural gas is still a huge weighting in the commodity indices, there's the wild card. To me, natural gas can always go either way. I tend to remain bullish because on an inflation adjusted basis, natural gas is the cheapest of them all. And so maybe that'll be the number one, power source that we use. Maybe that'll, translate into other things if it doesn't take off. If it does, maybe we have a problem, but now hopefully we can pivot to uranium or whatever other sources are cheap at the time.
Natural gas seems to be, natural gas seems to be the thing. It's so expensive overseas. You'd think that we could be a huge exporter of natural gas.
Well, the liquid natural gas story is real, and like once that arb closes, then we'll have a more efficient natural gas market. I think that's probably that's like a 5-year conversation, though. With the speed that the I keep saying GLNG because that's my favorite stock in the space. LNG facilities need to be built, and they're being built, and then eventually we'll have one global gas price. I think it's kind of a dream scenario or maybe magical thinking, but it sounds totally possible if we're going to be able to ship it around the country and around the world a lot easier. So
what are you looking at, Tony, as far as look, AI, we're going to have to power it. So do you think it can run on natural gas? Are we looking at uranium? Obviously, Microsoft went and bought 3 Mile Island. So that's a place that I didn't grow up too far from there. And it scared the crap out of me when it was when it was up and running. But it's obviously a lot safer now.
Yeah, I think that we're going to pivot toward uranium. It seems like it was the propaganda of probably the fossil fuel industry created to tell people how goddamn dangerous nuclear energy is. And I think that was the dominating theme for a long time since those incidents all happened. So uranium's been bottled up. Now we've got a uranium-friendly energy secretary, which is going to be super enlightening, and we're going to see how that goes. He's on the board of an SMR company, which is, interesting that he's got an inside scoop. We've got an industry insider in the energy secretary position rather than a DEI hire. So, this is a really relevant thing. I think that he's going to make nuclear a bigger part of the U.S. energy portfolio, and encourage it and allow capitalists to create it and build it where they can and where it makes sense. Like you said, it feels like we're in the first inning, and we'll see if it's necessary with the DeepSeek story now, but it seems like we're in the first inning of the, AI power generation theme trade. We can take that in a dozen different directions. And, with the headlines, like you said, of Microsoft partnering with a nuclear producer. Reactor. Yeah, exactly. This is the first inning of this stuff, right? Like I know Amazon partnered with a small modular reactor. There was another Google story where they're looking into nuclear power. So who knows if we're going to need it on this side of the DeepSeek story as much, but I got a feeling as time goes on, we're going to rely on it a lot more no matter what.
Sounds like you're a crypto kind of guy with with the death of fiat currency. Is there a play here for crypto to somehow get the country out of this debt and somehow come out the other end with a currency that's a little less regulated?
That's certainly above my pay grade, but given what they're talking about, this is the most crypto friendly administration in history, right? They've got a crypto and AI czar and David Sachs. They're talking about a strategic cryptocurrency reserve. Trump has got a meme coin. Melania has got a meme coin. I'm waiting patiently for Barron's meme coin. And, so the thing looks like it can stick around, right? Like I think my general theme with Bitcoin is you have to be off the zero boundary on your investments, right? Like you shouldn't be sitting around long zero Bitcoin if you plan on having capital at work for years, right? Like it's just too tempting a thing to be in where the allocation for it's getting clearer with all the inflow into the ETFs that the corporate allocation for Bitcoin is not zero anymore, right? There's not hundreds of millions of dollars pouring into the ETFs every day because these guys don't think it's going up. And if those are the guys that are smarter than me that are putting flow into it every day, yes, there is a sentiment and positioning scenario that comes into play at some time when everybody's long, bullish, and looking for higher. I don't know that we're necessarily there yet. And Bitcoin's been very resilient around 100K, given, everything that Trump is positive about, et cetera. Maybe it's a delayed reaction sell off, and maybe it can't. I've had this conversation in my head where like, man, it can't get any more bullish for crypto out there. Like we've got the friendly president, he's floating meme coins. It doesn't get any more bullish for the currency. So you wonder if it's a sentiment thing again, where Trump gets hired, Trump gets elected, he hires a crypto and AI czar, and that's the end of the crypto rally. But that said, I can't go to sleep on something that's kind of been left for dead twice and came back from the dead twice.
That's right.
To me, it's not going away. So I have an allocation to Bitcoin. I'm long in my trading account. It's a 60% trade right now. Knock on wood, one of the best trades I have in the portfolio. And yeah, I'm going to manage the risk just like anything else. If it goes down, I'm going to get out before I lose my money.
Yeah, I can't wait to see that 7-foot tall meme coin, which is Baron Trump, because
Bring it on,
he's
man.
he's
That
a
kid's
big
going to be
boy.
president. He's going to be president one day. Watch.
Oh, geez. What are you looking at in the for I guess the near future and long term? What's the not individual stocks, but a sector or plays that you think that what, this is where it's at. This is where I think I can make money.
Yeah, man. The signals for me are the Trump trades, Andrew, kind of going over a little bit about what we mentioned, touched on before. But, it was very clear that his first breaking away in the polls and then winning the election meant that the complexion dramatically changed for cloud storage, software, cybersecurity, airlines, transports, financials, broker dealers. They all just up and went when it became President Trump's turn. So those are the trades that I'm not taking off my radar screen because they could be the ones that trend all year. Some of them had been consolidating. And for me, that just is a signal that when they break out, they're going to rally for way longer than anybody can even imagine. So those sectors that I listed off right there, I think those could be some of the better performing sectors outside of technology this year. Well, excuse me, 3 of those were tech sectors. Sorry about that. But those are the sectors, those are the subsectors, I should say, that I've got high on my radar screen, if not already on my pad.
So you're sitting around with family and friends, and they say to you, Tony, what advice can you give us to deal with the volatility that we've got right here and now, and how are we hanging on to our money?
Well, that you have to always have I start every trading lesson with survive to trade another day or survive to invest another day. That's just kind of about kind of kicking tires on investments and trades and being disciplined with those trades and investments and things like that. One of the things, though, that's absolutely necessary is you got to learn to earn in your life, too. You got to learn how to make money in markets. If you're able to do it, it's the biggest piece of freedom of all time. But, for Joe Sixpack, that's, investing his hard-earned money into the markets, you tell him to go slow, be methodical, be in things that you're comfortable with, be concerned when a position loses money, whether it's a position or investment, be concerned when it's down a lot. Decide if you should be in it, because I put investments on or trades on and they rally to the highs and back off a little bit. And then I find another trade that looks better and that looks like hotter money and might transfer some money into there. And if that works, then I start pushing more money toward that thing. And next thing you know, you have a multi-bagger on your hands. So that's just the way that I think that mom and pop or the sort of regular guy haven't learned yet, or maybe they have and I don't know about it yet, but I feel like that's at least good enough advice, is to sort of invest your money slowly and take very good care of it, watch it carefully, know what you're in, know when you're wrong, things like that.
Do you have a rule of thumb of how much I should make, or is it okay, I got a certain percentage here, I'm going to take some off the table and let it ride? Or when it's going down, you say, okay, you know what, I'm only going to lose this much?
So I have a very specific strategy for that called a trailing stop loss, Andrew. Right? So for example, last November, I came out raging bull in stocks. I came out and I was like, drop November 2023. This is not 24.
Okay.
I said, everybody stop what you're doing and buy the S&P in size right now. Right. That was the day that we got a benign CPI number when we were afraid of headline inflation. And that's what was knocking the market down. And we got a benign CPI number, and like 27 sectors picked up and had multi-sigma moves higher. Right. So what happened was I guided everybody into the S&P. I put a stop loss below the market and I waited. So like any position, you get a position on, your stop's below the market, your target is above the market. If it starts going your way, the first thing you do is you bring your stop loss to break even, right? So you're not losing money on this position. Then when it's going your way, you start raising it to a level where you're taking profit from the price that you got into it at. And so this way, if the market is going to keep trending like the S&P did, and I'm still in the trade from a year and 4 months ago, never got taken out, that's, I have a trailing stop below the market. When it takes me out, I get out with no tears and I have a great trade on my hands. So that's kind of when you don't really know when to sell, because the market can pick up and resume its trend after that. But it gives you good reasons to lean on to sell and accountable reasons to sell. And then you have to use your own ability to buy it back, right? You're free to buy back whatever you just sold, right? Nobody tells you that you can't buy some S&P back if you made a sale. Making a sale at new highs is okay. Buying things on dips is good, right? So it's just managing the risk, man. That's the whole thing is managing the risk with a trailing stop, being disciplined, figuring out how to stay with the trend and let the market do the work for you. Excuse me.
Awesome. It's a great education and a way to look. If it does come down and you've hit that stop loss, even though it's above where you bought it, you've made money. So be happy with it. Move on. Keep an eye on it. Maybe you could buy it back below where your stop loss was. So it's an excellent way to look at it. I appreciate the education. I really do.
Not at all, man. Not at all. I'm glad it helped you.
So the podcast. Tell us about the podcast.
It's the labor of love, man. It really is. I mean, you run one, so you know it. There's something about putting your most unvarnished thoughts out there and having people, well, most people appreciate it. Some don't, this and that. But what it is that's exciting for me and Jared is we finally, like the two of us now finally have like a functioning funnel, a functioning sales funnel where we can give people a lot of free commentary and kind of draw them into our subscriber base if they want to really get granular with us and probably be better at making money than just listening to the podcast. But it's exciting because it's kind of like being a sportscaster. You get to make calls and find out if they're right. You get to take victory laps when you're right. You get to admit when you're wrong and be an upstanding risk taker, because there's nothing wrong with being wrong. And you get to have your personality and you get to be free with it. So Jared and I, we are working really hard on getting better at this. We have massive expectations for the podcast, as in we'd like to be doing it the day before we die. And we have a long horizon time frame on this. We have short, medium, and long-term goals for it. And we want to be the Joe Rogan of trading. We want to be the Joe Rogan podcast of finance and trading, because it's going to be talking about trading most seriously. And then we're going to talk about current events, off-market topics, things that are fun, things that are gross, things that are cool. And that's what most people want to hear.
Yeah, and I appreciate this. I come from a sports anchor background, so I appreciate the analogy. So I get it completely. And yes, I've listened to the podcast. I've watched the podcast. You guys are phenomenal together, and it's a lot of fun to listen to you guys go back and forth. And even when you're not talking about markets, you're talking about life things. Very, very cool. So
we're trying to be a little bit of radio for the current generation.
I appreciate it. Where else can we find you besides the podcast? I know you're on Twitter.
My free Substack, tgmacrosubstack.com, tgmacro at Twitter, tgmacro.com. If any of your listeners want to contact me, they can contact me at Tony at tgmacro.com. That's absolutely fine. I think that covers it, man. That's pretty much where you can find me.
Awesome. Tony, thank you so much for the time. I really appreciate it. This was a lot of fun and very informative.
It really was a great interview, Andrew. Thank you very much for having me on.
Appreciate it. Thanks so much for watching our discussion here on Wealthion. If you would like help with your financial efforts, head over to wealthion.com/free for a free portfolio review. But before you go, like and subscribe to the channel, and don't forget to hit the notification bell so you hear about new videos. And follow us on social media. All the links are right below in the description. And if you like this content and are looking for more ways to achieve long-term wealth, watch this video next.